cord where you walk.
Yep.
That's why she has that thing around her neck.
Yeah.
That's interesting.
All right.
Have you ever been in a class with one of these?
No.
If you haven't seen one of these before, it's called a swivel
I just thought
camera.
it was a stylish necklace.
And it picks up what you say, but it picks up what I say more so, and then it moves where I move. And the reason we're doing this is twofold, actually. We have 6 or 7 people gone today, and today's important because we're starting a new unit, and it's an important unit because it's really kind of like the whole basis of accounting. And so I didn't want them to miss completely. The other reason is I'm trying to take myself in class every week or so I can analyze it and see how I can improve. And so we have 8 of these in our high school, so I'm surprised if you haven't seen them at all. Different people are using them for different reasons. At some point, you might be up here being taped for a project, but at this point, it's just on me, so you don't have to worry about that. What we're moving on to in this unit, there's 3 main things that we're trying to accomplish here. We want to do what's called journalizing, which is writing things in a journal. We want to post to a ledger, and I'll be showing you an example of what a ledger looks like in a minute. And then we're going to do a trial balance. So if you could write that in your notes so you kind of know the basis of where we're going. So first we journalize, and this is the process we're going to go over, and we're going to do this all year. You journalize things to what's called the general journal, you post them to the ledger, and then you do a trial balance to see if everything's coming out okay. So before we get too far into this, let's just review real quickly about the assets, liabilities, and equity, which is, of course, the basic accounting equation. Remember, I think I mentioned this one other time, that these are called the elements of the basic accounting equation. When we write the different account titles down here, that's something different. Those are accounts. So which accounts are assets? Just shout out some to me. Cash? Accounts receivable? Equipment? Supplies? Okay, that's a good start. There could be many more. I wrote them in the order you told them to me, except these last 2. And the only reason I wrote it this way is you'll see it time and time and time again that cash is always first, accounts receivable is second, supplies is the next one, and then after it, these would all be in alphabetical order. And the reason they do that is this is the most liquid. Who remembers what liquidity is? We talked about it in personal finance. Carmen?
It's the fastest thing that you could use.
Yeah, the fastest thing that can be turned to cash. Cash is already cash, so it's the most liquid. Accounts receivable, you can turn it into cash pretty quickly by requiring people to pay off their balances. Supplies you could sell pretty easily to, businesses that are around you. And then equipment and so on, then it gets a little bit harder for you to find someone to buy it without losing money. So this is the order we generally write our assets in. All right, for liabilities, Griffin, what's an example of a liability?
Payable?
Yep, we're looking for the word payable usually. Our most common one is accounts payable. What's another one? Anybody? It's for a longer time than accounts payable. Notes payable. And we just abbreviate it like that. So accounts payable, notes payable, but now we're going to have other ones that are like sales tax payable, federal income tax payable, and then for the first time we're also going to have unearned revenue accounts. I'm hoping you're writing these things down.
Gotta tell somebody.
I shouldn't have to anymore.
We don't take notes in this class, so.
Unearned revenue. I'm going to wait till you've written these down because I want you to pay attention. Okay, unearned revenue is a liability. Because if someone pays for things before you're going to give them the service, it's considered a liability because you owe them that money if you don't provide the service. So for example, if you pay for a magazine subscription ahead of time, you pay for a whole year for Sports Illustrated, and let's just say it was $120, it was $10 a month. It's not that much, but say that it was. Our business is Sports Illustrated, our customers give us $120, we haven't given them any magazines yet. Have we earned that revenue? No, that's why it's called unearned revenue. If your customer, God forbid, dies 1 month after they bought the subscription, wouldn't their family want the rest of the subscription back?
Yeah.
Or you were mad about Sports Illustrated Swimsuit Edition, and you say, I'm canceling my magazine. You would want the rest of your money back. I can see you all did that, didn't you? Yeah, you said, that's ridiculous. I'm canceling. So unearned revenue accounts are liabilities until the time has gone by and they got all their magazines. Can you guys think of another business where people pay stuff ahead of time?
Like if you want to pay ahead of your loan, like what?
No, paying ahead of your loan that's a little bit different. Think of a business where people pay before they get the service.
Like amusement parks.
It would be if like you lived in Florida and you bought a year pass to Walt Disney World, something like that. It would be, if it was the same day, then it wouldn't. How about a fitness club? Sometimes you get a deal if you pay for the whole year ahead of time. And so those are unearned revenue and it's a liability. And we're gonna have that from time to time. We're so used to saying, look for the word payable. If it has the word payable in it, it's definitely a liability. But there are some other accounts now that don't have that word and they're still a liability. And those are unearned revenues. And they usually have the word unearned in it, but not always. And then we have our equity, which is going to be our common stock, our dividends, our retained earnings. Okay, those are all account titles. All of these down here have balances in them. Assets, liabilities, and equity are just like categories. Just like if we had said vegetables, and then you put carrots and squash and beans. Okay, they would be kinds of vegetables. If this said fruit. Okay, so if I ever say, what's an account title of an asset, or what kind of an account is this? If I say what kind is it, you're gonna say asset. If I say give me an account title, then you would say one of these down here. Now when we are journalizing, we're going to be writing down at least 2 account titles. And we've been doing that already in those columns. We picked 2 accounts and we would say, oh, they gave us cash, so our cash went up 30,000, and they got common stock, and so that went up 30,000. We had 2 accounts. We always have to, in double entry accounting, you always have to have at least 2 accounts. And so in journalizing, it's going to be important that we can pick out which accounts were affected. So that's kind of just a brief intro to that. What I want to show you is a couple slides and then a video that you're going to remember for the rest of your lives.
Great.
It's going to have you singing and tapping your toes
Oh my god, it's gonna be terrible.
for the rest of your life. In fact, I wouldn't be surprised if some of you decided to create your own song to put on YouTube.
like that.
Oh my god, I would not die.
Are you planning your career in commercials or what?
Yeah.
Okay, so those of you who are watching this on a YouTube video, and now it didn't go with me. Somehow it followed you.
You should walk over here.
So if you're watching this on a YouTube video and you can't see the screen very well, the PowerPoint presentation is on my website. But we're looking at that for the steps that we're going through here, we're gonna look at what our accounts are, and we're gonna be keeping track of if they went up or down. So did they go up or did they go down? We're gonna write these in what's called the general journal, and we're gonna post them to what's called the general ledger.
Should we read this?
No, this you don't have to, because you're gonna get a printout of. Oh
Will
my
you, okay,
goodness.
so will you tell us what we're supposed to write?
If it's on the board over here, I would write it down.
Okay.
If it's on here, no.
Gotcha.
Alright, so the ledger and the chart of accounts. We're gonna always have, when we start a big problem, it will have a chart of accounts. It will list all of the accounts that that business uses, and the accounts are numbered. Cash is always 101, and then they usually go up by 5 or 10. And the reason they go up by 5 or 10 is so that if they introduce a new account, they have a place to slip it in. Big businesses even have like 101.742. They have decimals and they're long numbers, like the school district has really long account numbers. Accounts receivable is 106, then they jump up by 20 to supplies. Prepaid insurance is an asset account, we'll talk about those later. Equipment, accounts payable, and so on. So you can see their numbers as we go through these. Your revenue accounts are in the 400s, and the expense accounts for this business are in the 600s. So that's called the chart of accounts. So when you're doing, like if you were a CPA and you did books for different businesses, each business would have their own chart of accounts, and you'd have to know that because the accounts would be different for each business. Alright, so this is what you're gonna really remember about accounting. Is when you're 60 years old, and if you never take another accounting class after this, and your grandson or granddaughter comes to visit you and they tell you that they're in accounting, you're gonna mention debits and credits. And your grandchild's gonna go, wow, grandpa or grandma, they know their stuff. There's debits and credits in accounting, because that's what we use all the time. These are called T accounts. They look like a T. I'm writing them on the board, so you should be writing them on your paper. Love it? Alright, so T accounts look just like T's. At the top of the T, you write the account title. So if this was the T account for cash, we write cash. This is for accounts payable, we just write accounts payable. Let's say this is common stock, we write common stock. So a T account looks like a T, the account title is written up at the top, and the left side is called the debit side, and the right side is called the credit side. And that is always true for every single account. It doesn't matter what kind of account it is, debit is always on the left, credit is always on the right. Now, oddly enough, they abbreviate these DR and CR. Now CR makes sense because credit starts with a CR, but debit doesn't really make sense, but this is what they use. I think I read somewhere that it has something to do with debit in Latin, and maybe it has an R in it. But we have DR, CR, so I'll usually write that. It's shorter. So debit's on the left, credit's on the right. Here's our equal sign, right? Assets equals liabilities plus equity. The next part takes you a while to get used to, and you're going to have to memorize it, but you'll also have to understand the reason behind it. All right? If the account that we're talking about comes from the left side of the equation, so in other words, if it's an asset, it's going to increase on the left side of the T account. So you're gonna put a plus over there and a minus here. If the account title is from one of the elements that's on the right side of the equation, then the plus sign goes over on the right side of the T. So here's our equal sign. Any accounts that go over on this side have the plus on the credit. Any that are written on this side have the plus on the debit. Now, does anyone have a question about this so far? Now, the reason I kept focusing on the fact that debit's on the left, credit's on the right, is what a lot of times happens is students go, okay, I'm gonna do notes payable. It's on the right side of the equation, so debit goes over here and credit goes here. No, debit is always on the left. Credit's always on the right. What changes is where you put the plus sign. Notes payable is a liability. It's on the right side of the equation, so where am I going to put the plus? On the right side. And so we say that notes payable is a credit account, meaning its balance is on the credit side. And we would say cash is a debit account balance because it increases over on the debit side. So this is Mrs. Even's brief intro. We're going to watch a video, and then we're going to try a couple problems showing how this works. So I don't know. I think I'll have my students that are watching this, you need to go to YouTube, and you need to search, where did I write that down? You need to go to YouTube and you need to search Debit Credit Theory by Colin Dodds. Debit Credit Theory by Colin Dodds. Alright, so I'm going to stop this for a minute.